Well, staying with that, looking at Chinese stocks under pressure today. Now, that's in spite of a robust government bond auction overnight and a pledge by China's rulemaking body to, quote, use progress to support stability. For more on what this means for investors, we welcome back Yahoo Finance's Blikre. Hey, Jared.
Hey, Rochelle, use progress to ensure stability. That can mean a lot of things, but not having a whole lot of effect on the market right now. Chinese stocks, we'll get to them just underwater a bit, but I wanted to further expand on China's GDP. This goes back to the early 90s, and you can see how volatile it's been over the pandemic, but it looks like it's right around 4.9, just shy of 5%, which was kind of a ceiling as GDP was very slowly slowing into 2019, 2020. Regarding that meeting, they didn't set the official price GDP target at 5%. That's expected to be done in a few weeks, but the hints are there, and it's expected to be done. The Chinese government, it's no surprise, has been in quite a pickle. It is trying to revive growth after the pandemic, but it's also facing a huge property slowdown. Meanwhile, they don't want to overstimulate. They don't want to print too much. And so it's just been a very delicate balancing act, and risk markets have really suffered. Let me show you this. You mentioned that 30-year auction overnight. This is the U.S. yield curve in purple versus the China sovereign yield curve in cyan down here. This goes from the very short term to the longer term. China is actually looking like almost a normal yield curve, which slopes up. Usually it's going to slope up more. And then in the United States, of course, we've been with this inverted market for about a year and a half now. Let's take a look at the Chinese stocks, and we also have foreign currency. This is actually a 10-year yield, so I'm going to go to Chinese stocks here. We can see, and this is currencies. Let's see if we can, there we go. And this is not what I'm looking for here, but we do see some of these Chinese-affected stocks in the green today. Sorry about that, guys. Wi-Fi Interactive not participating here. But we finally do have our Chinese stock screen. Here's the heat map showing Chinese stocks under a bit of weather. I want to show you something interesting. The U.S. market has really come alive over the last month, since the beginning of November. And you can really see that over that same time, it's been a really mixed market. You see Alibaba down 15%, Pinduoduo up 26%. You contrast this with what's happening, for instance, in the innovation market and in disruption. And you see, for instance, Coinbase up 61%. That's only over the last month. Roku up 24%. So conditions have been much more favorable for tech in the United States. Over in China, it's more of a, take your pick. It's a very much a bifurcated market over there. Overnight news doesn't seem to have much effects on the market here today. I think the focus has really been on Japan and what's going on with their big meeting, interest rate decision in a couple of weeks. But nevertheless, interesting to watch how all the central banks in the world have to navigate this very sticky situation with inflation coming down, but the desire not to overstimulate.
Indeed. A lot of people wondering just how much intervention the Chinese government is going to have to do to prop up the economy here. Appreciate you breaking that down for us. Our very own Blikre.